Hello, everybody. My name's Alex Sendek, host of Home Run, the podcast where we help you turn your real estate plays into wins fast. In a lot of ways, our present-day market is a lot like the wild, wild west, with prospectors flooding the short-term rental space, panning for gold and high cash flow rentals. It's no surprise that today we're talking about short-term rental investing. But not just any short-term rentals. We're talking about how to actually find one that, A, cash flows like crazy, performs well on paper and in real life, and maybe even one you'd like to use yourself. So with that in mind, I'm joined by Emir Dukic today, CEO and co-founder of Rabbu, which is a company that provides short-term rental analysis used by over 1 million investors across the United States. If you've ever felt like finding a legit short-term rental is like finding a needle in the haystack, I know I often do, we're about to hand you the metal detector. Also, we are joined by our very own Makalee Bethard, a senior loan guide here at Beeline, who will be discussing the financing side of things once Emir and Rabbu find you that short-term rental with long-term success. Emir and Makalee, welcome to the show today.
Alex, thanks for having me.
Yeah, thank you for having me.
Absolutely. Pleasure having you guys, and thanks again. So just rolling right into it, Emir, kind of starting with you. I don't know if you want to give us a quick elevator pitch on what Rabbu does and just a quick intro and where all of this got started. That'd be great.
Yeah, absolutely. Best way to think about us is we're the Zillow, but just for short-term rentals. So if you're looking to buy or sell a short-term rental vacation home, Rabbu is the place to go. We have properties that are both on the MLS, so publicly listed properties that we put Airbnb and short-term rental performance data on top of to tell you, hey, if you buy this, this is how much you could make. But then we also have proprietary properties, meaning that we have properties you won't find anywhere else where sellers come to Rabbu and say, hey, I need to get in front of vacation home buyers, short-term rental buyers. I know I can list it in MLS, but good luck finding the right buyer who actually knows that this is the best use for this is a short-term rental. So let me start it off by putting on Rabbu and seeing, if I can find my buyer there. So we look at properties that are on MLS, but then we also have properties that you can only find on Rabbu that you can then research. We give you all kinds of free data on markets, where to buy, what performance level looks like, and historically what it's looking going forward, just so you can educate yourself on what market to buy in, what the revenue potential of property is, and then most importantly, we connect you with the right resources on the ground to actually help you on a transaction. So we'll help you find a lender who can actually provide you financing that's specific to short-term rental, which is obviously important. You can't just go to Bank of America or Wells Fargo and get a short-term rental loan 95% of the time unless you get some amazing relationships. And then we also connect you to agents locally on the ground who can kind of work you through the details of closing the transaction that have the expertise on this asset class, a short-term rental asset class. So that's what Rabbu does at a high level. The way we got started is actually pretty interesting. We actually started operating short-term rentals ourselves. So we used to be a short-term rental property manager with 400 properties all across the country. I started that company with my wife. Initially, we're based in Charlotte, North Carolina, here in Charlotte, with a little 200 square foot apartment that we had above our garage that ended up paying the mortgage in our house. Got more as an Airbnb, got more properties in Charlotte, all did exceptionally well. Cash flowed much more than they could have as a long-term rental. So it turned into a business initially, again, on the property management side. But as part of that, we always had to answer two questions. If we were looking to work with an investor who's buying an Airbnb, it's like, hey, I have this existing long-term rental. How much can that make as an Airbnb? And then, so that was question number one. Question two was always, hey, I'm ready to buy another Airbnb. Can you help me find what to buy? So the way we actually grow a property management business is through the initial version of the data tool that you find now on rabbu.com, rabbu.com. We basically created this estimate for short-term rentals, free to use. Type in an address, it would tell you how much it would make as an Airbnb, allow you to do a comp selection so you can get a more detailed breakdown of the revenue potential of your property that you're looking into. So really solve the own problem first, helped us grow a property management business to, as I mentioned, over 400 properties all across the country. And then in May of 2023, basically decided to get out of the management business completely, transition our properties over to another property manager. And basically said, hey, the bigger need in the space is not necessarily another property manager. There's a lot of groups that do a really good job of managing properties. The bigger opportunity really is helping individuals buy properties. There are other great data tools out there, but they're behind a paywall, and then you have to go to Zillow, and then go to that data tool, and then use your own spreadsheets to come up with revenue projections. It just didn't seem easy enough like it should in 2024 and 2025, right? So we kind of break that gap to really kind of become that go-to marketplace for anyone looking to transact on an asset here in the United States.
You talked, and thank you for that. First of all, that was an extremely robust answer. And I think you hit the nail on the head. It sounds to me like it's a marketplace that's almost a one-stop shop for everything short-term rental related, which is a relief, as I think you touched on in 2024, 2025. There's still a lot of gray area. I don't think a lot of people know where to begin with short-term rentals, in a sense that, from where to find one, and all the way down to how to finance it, how to get approval for it, and what benefits there are, et cetera. So, short-term rental investing is hot, but finding the right one, at least right now, I think is still pretty hard. I mean, again, like I said, the average person, I think everything other than just knowing that short-term rentals are hot is a bit of a mystery. So, like for you, like where do you start?
I love to ask investors on like what market to look. I want to ask investors, and I do ask investors all the time, like what type of investor are you trying to be? So when it comes to short-term rentals, there's, the way I think about it is like three types of investors. And what I mean by that is, what are your goals as an investor? Are you what we call a cash flow investor? So are you somebody that's looking to buy a property for its cash flow and cash flow only, meaning that you're going to make an annual or monthly return on that asset? You're going to have some money in your pocket that you can utilize in other ways, right? So are you a cash flow investor? If you're a cash flow investor, your markets that you look at and your return profiles that you're looking for change drastically, right? So that's one play. I can be a cash flow investor. Second play is I could be an appreciation investor. So I'm somebody who believes in a market and I'm okay with breaking even, maybe even losing a little money month to month and year to year, but knowing that I have high confidence in a market that my home that I acquire there is going to appreciate over time, where I can get a larger sum of money when I sell it 5 years down the road. So that's the second type of investor that we think about. And then kind of the third one is really a lifestyle investor, right? And that's somebody who is looking to buy a property on the beach that they plan to use a week, a month, whatever the case is out of the year. But in the meantime, they're going to rent it out as a short-term rental or vacation rental to offset most of their liability. So basically, those who are looking to have a property that offsets their costs that they can have for personal use, and then short-term rentals offset.
Timeshare almost.
Almost, right? But like it's what a lot of people do.
But a
with, like,
better
second
version.
homes. Right. So that's my first question. It's like I like to have a conversation with individuals. Like, who are you? What are you trying to be? But I think kind of that's the first place that I like to start with individuals. Like, pick one lane. If you end up benefiting anywhere else, perfect. But what's the lane that you want to play in so that you can set realistic expectations? So honestly, before you even get into markets, that's my first question. It's like, what are you trying to accomplish? What's the most realistic path for you?
What do you see a lot of people, is there an even split on the answer to that question, or how do you see people trending often in a certain direction right now, or it's a mixed bag?
Yeah, it's a little bit of, it's interesting. I love that question because it varies. It's almost varies by, I'm trying to think of the right term here. It almost varies by how long somebody has been an investor, right? Like the stage of an investor. A lot of net new investors coming into the space are saying, hey, I want cash flow. I only care about cash flow, right? I'm looking at this as a way to offset, some costs that I have. I'm looking at this as secondary income. I'm looking at this as an opportunity to make some more money so I can retire early from my 9 to 5. So you see a lot of that still to this day.
Sure.
I've seen a lot of more sophisticated investors really play that appreciation card and say, hey, I know how volatile real estate is. I know the interest rate environment that we're in today. I still think it's a great time to invest because of the appreciation play of these assets. So really, we have more some of these kind of seasoned investors that are going for the appreciation play. And then we definitely have some, and this is actually rising more than the others, are the lifestyle investors. Those individuals say, hey, I actually want a home on the beach that I can create memories with my family that really doesn't cost me much, and maybe there's some tax savings that I can capture throughout the journey. It's, it used to be, especially kind of during the low interest time periods, where it was much more heavily towards cash flow. but it's starting to kind of shift towards those two other categories more, especially the more experience an investor has.
What would you say to an investor like myself I want to invest my money, but I want to feel safe as well, right? Like, what would you say to that person? Or am I overthinking it? Am I over panicking? What would be your response?
Yeah, I mean, obviously, I would say have backup plans in mind, right? How much would you make if if short-term rentals weren't working out and you had to turn this into a long-term rental? And can you afford to make that payment? And can that fit into your financial plan? That would be my kind of advice to anybody, is like, have a backup in place, make sure that you can afford it if there's a downside to it,
Sure.
And that you can sleep, well at night. Because at the end of the day, no money is worth losing sleep over, and no investment is. So if you can't sleep comfortably, then obviously I would say don't pull the trigger. It's better to sleep at night than to make a little bit more extra money on a day-to-day basis. So that would be my take, is be comfortable with the downside scenario. And if that's the case, pull the trigger, because the upside can certainly be significant still.
100%. And you talked about upside. I think let's talk about upside for a minute, and let's talk about defining the return. How do you find these higher return properties, and what is your definition of a good ROI or return on investment? Is it like hot, good, average? How can I kind of avoid the infamous Airbnb bust type scenario? Like, I don't know if you want to go into that a little.
Yeah, I mean, the way we kind of think about it, for us, kind of the key number that we display quite a bit on our site is gross yield. Basically, your annual income that you can generate from the property divided by the price of the property. No, this doesn't look into any of the expenses or anything else associated with it. It just looks at gross yield. Hey, I can make $100,000 a year off this property. This property is going to cost me $1 million. I mean, but gross yield on that property is 10%, right? So that's the way we think about it. We typically kind of like to. This is not perfect, but just to, like, if you want like a back of the napkin type of rules, like if you want a cash flowing property, you want the gross yield to be north of 15%, right? So that's where you start. Hey, if it's not north of 15%, it's unlikely to be a high yielding, great cash flowing property. So that's the kind of where we start. If you're kind of more of an equity investor, you really want to be in the high single digits to 15% range. And if you're, somebody that's more of a, lifestyle investor, you want to be in the high single digits.
Sure.
You definitely don't want to be too low, because at some points you won't be able to support that lifestyle if you go
Sure.
too low on that end. So that's the way we kind of define it. We tell people how to do it. We've built all kinds of tools on Rabbu.com to help you find those right properties for you. And we always like to start on the market and kind of look at it from a market specifically. So we have this tool on Rabbu called the Market Finder. And basically what that does is it looks at various factors to give you the investment score or the ROI score of a market. And basically what it looks at is, what is the occupancy in this market? What's the annual revenue they can generate in this market? What is the Zillow Home Value Index? So what is the average purchase price of a property in that market? And then, how many existing Airbnbs are in that market? Based on that, we come up with a ROI score that tells you, hey, this is a market that you should invest into or that you should look into deeper, right? So we provide you some of those tools that you can go in there and say, hey, and you can search by a state, by over an entire country. We give you the ability to start taking a high level view of a property and say, hey, where should I even look? And a lot of times we tell people to look in markets that they've been with or that they want to visit, or experiences that, they want to recreate, because if it's something that you want to do, there's likely others who want to do the same thing. Even no matter what your investment strategy is, right? If you're a cash flow investor or, a appreciation investor or a lifestyle investor, and you have to, I would invest in a market that you're familiar with, that you think you would travel to and you would enjoy staying at as a short-term rental investor. Because, if it's something that you're not comfortable with, it's going to be hard to create the experience that you want the guests to have, which ultimately leads to the return that you have. So find the right market, and then, dive deep into that market. So there's a lot of data out there on Rabbu and other places where you can actually see the breakdown of the number of properties by bedroom size. And once you start digging into it, it's really quick to see trends between how big of a property it is, what the saturation of that property size is, like how many 1 bedrooms, how many 2 bedrooms, how many 5+ bedrooms, and what the average revenue of that size is for you to say, hey, I'm looking in Myrtle Beach, South Carolina. It's predominantly 1 and 2 and 3 bedrooms, and the delta in revenue between a 1 bedroom and a 3 bedroom is $10,000, while the purchase price delta is $200,000. But if I look at a 4 or 5 bedroom, my revenue would jump 30-40K, while the price would jump 100,000. I'm just making this up, but all that data is available to you, so you can then see, hey, if I'm looking at this market, this is the type of asset I should be looking for here, because everything else is not going to give me the returns that I'm looking for. So really kind of diving deep on the market and seeing, what the layout of it is and how individual types of units are performing there is really the best secondary step that I always tell people to take.
And for all you listeners out there, I've been on other competitor sites, and I have to give you a compliment, Emir, for Rabbu. Your website, when I say it's a marketplace that truly feels like a one-stop shop for short-term rentals, this is it. I mean, I'm seeing gross yield percentages on every single, short-term rental for sale. I'm seeing the annual rev, front and center, square footage. Everything you could need as an investor is already right there on the first page. Before you even dive in, it's right there. So then you dive in. If you do a little bit of a dig, then you see absolutely everything. It's super slick. For listeners out there, it's rabbu.com, rabbu.com. Check it out. I mean, it is truly, you guys did a great job.
Thank you. Yeah, I have a great team working on that product. We're always getting feedback from our users and improving it. And, having been Airbnb hosts ourselves and knowing what investors look for, having purchased properties ourselves, we just know the problems that we're solving for. And that's what when you're best at building something is when you've lived the problem. And you solve it, and you work with great advisors and a great team that tells you what you should build and how it should be delivered. So I appreciate you saying that. I'll pass that on to the team. We definitely care about the product. We want to make sure it's the experience that users want.
Huge value driver for investors. So absolutely check it out again. And while I'm kind of poking around on that website, one thing I guess is a number one question, and you talked about this, you're a Charlotte guy. FYI, I'm a Charlotte guy. Shout out to the 704. I grew up in Lake Norman and the Mooresville area. So don't live there anymore, but I got a soft spot for Charlotte. And I think you touched base on this. Like, when you think short-term rental, everybody thinks beach, everything, a beach, a log cabin in the mountains, something like that, out in Bozeman, whatever. You started it in Charlotte, right? Which is a small market, and now it's a booming one, but it was at one point a small market. Talk to me a little bit about that. Like, where are you finding these niches, I guess? Where are the sweet spots?
Yeah, I mean, it really depends, again, on your investment strategy. Urban market is usually a better market if you have more of an appreciation play, right? If you're looking to see your home value increase over the 5 years, where you'll probably get a better ROI in some of the more traditional kind of vacation markets. What we've loved and what we've seen a lot of great success with is adjacent markets to traditional vacation markets. So, let's say we'll stay in the Carolinas. Asheville is a destination that people love from all across the Southeast. People will go to Asheville in a heartbeat. Asheville does have some tight regulations, but there's a lot of great areas adjacent to Asheville that do really well. So we've seen a lot of interest in markets that are drive-to destinations to larger city hubs. One of our top performing markets right now is the Poconos in Pennsylvania. That's because people will spend a lot of time going from New York, Philadelphia, and different areas in northern U.S. to the Poconos because it's still relatively affordable both from a real estate perspective and a state perspective. So really, there's so many use cases for short-term rentals. Prior to Airbnb, traditional vacation rental was a Saturday to Saturday beach rental or a ski lodge rental or whatever the case may be. Airbnb just made it more mainstream and made it more appealing for an everyday traveler, right? And especially as you as a traveler grow and I have a family, I'm married, I have 3 kids, 3 boys. Hotels are the worst places to stay at for us. It's just, not only is it more expensive, but it's just not comfortable, and you just end up, being crammed in a room, or it's just not a good experience. You don't create the feelings that you want when you're traveling, right? You just
can't
like
spread
you
out at
feel
all,
stuck.
right? You can't spread
Exactly.
out.
It's all about creating experiences for individuals, and I think that's what short-term rentals really excel at. To take you out of being stuck in a box and bring families together, bring friends together, and get you closer to being part of the actual experience in the community versus being a tourist, right? It's not surprising that Airbnb had their big launch yesterday and they doubled down on the experience side, right? Now they're saying, hey, now you can book a massage or book, a cooking class or whatever directly through Airbnb, because they want to add on to these experiences that you're already creating through the home. So really the experience piece is what people want. And that's why also, to be frank, when you build out your Airbnb, you need to think experiences in mind, especially now as there's been more competition and more Airbnbs. You need to do things that make you stand out. During the peak of the Airbnb kind of craze, when everybody was buying Airbnbs, because there was less supply and demand was high because people weren't staying in hotels because of COVID. You could get away with throwing Facebook Marketplace or IKEA furniture in an Airbnb. You could do really well. That is no longer the case. You really have to be really kind of thoughtful about the hospitality and experience you build out at the home. And honestly, that's a great thing. So I'm excited about where the industry is headed. It's kind of going through its awkward teenage years right now, but I think it'll come out on the other end and be a really great kind of asset class that we all want to participate in.
What's a hidden red flag in short-term rental listings people often miss?
In listings that guests are staying at, or when you're thinking about buying something?
When you think about buying something, let's actually look at both. But yes, let's start with buying something.
One, when buying something. So one big one that people easily miss, and I see it easily miscategorized, and we always try not to do that, is they'll see somebody list their revenue of an existing Airbnb and it said, I made $100,000 last year, right? And you're like, great, $100,000 revenue, perfect. But that, a lot of times, up to 20% of that could be from cleaning fees. And that is not true revenue. That is not what we look at. None of the revenue that we showcase in Rabbu includes the cleaning fees, because to us, cleaning fees are at best a pass-through revenue.
They're a must-have fee. They're legit fees. You can't.
They're legit fees that will cost you money to fulfill, right? So that's one thing. If you look at an Airbnb listing and it says, "Hey, we generated 100,000 gross revenue last year," the first question should be, how much of that is cleaning? So that's one piece. The other piece, and this is really important to mention, is that just because a property did $100,000 last year doesn't mean it's going to do $100,000 next year. And the biggest impact to that is going to be you as the owner and or operator. What I mean by that is, me and Michaela could have the same Airbnb right next to each other, but the way our furniture is, the way she furnishes it, the way the cleaner that I hire, the maintenance that I do, the pricing that I set, all those things that I do on a day-to-day basis, our revenue could be easily 50% different because I do things differently than she does. So it really should serve as a directionally correct path of what's feasible, but that doesn't mean that you couldn't outperform it or that you couldn't do worse as well. So that's the other thing to keep in mind. It's not guaranteed, but it should be looked at as like a threshold that can be achieved. That it should be underwritten under, but I would always look for more upside, but protect yourself from the downside as well, obviously.
And now I'm stuck on the website because, again, I love your website very much, and just for somebody like myself who's probably going to use it after we finish this podcast, what are the filters or shortcuts you'd use to find something kind of unique under the radar on your site? Like, I don't know if you have any tricks of the trade that you'd like to share.
Yeah, I always. So always love to use our comps. So you can select when you're searching for a property and you're looking at an address specifically. I love to look at the comps, right? There's ways I can click. I can see what the revenue is for all average revenues for all properties. I can look at the 75th percentile and you can do the 93rd percentile. The system automatically picks the top performing properties for you, so you can see very quickly what the range of revenue in a market is. It could go from $35,000 for a 4-bedroom to $120,000 for a 1-bedroom based on various things. And then I also love to filter by amenity to see like what amenities actually drive returns. So you'll be surprised. Some markets allowing pets will make you $20,000 more a year, and other markets allowing pets will actually cost you $20,000 a year. It just really depends on the market and kind of the way that the traveler, what the travelers are looking for in that market. So some markets, like most markets in Florida, unless you have a pool, it's not even worth putting on an Airbnb, right? Because it's almost like a must-have. So there's a lot of these things that you can. Exactly right. So like everybody expects it. So if you don't have a pool, it's not good.
What am I going to do? Sit inside and sweat?
Exactly right. Exactly right. So that's what it is. Like, and it's always interesting to see like what amenities perform the best. An interesting one right now that we're seeing properties that have this amenity have a really good return are saunas. I guess saunas are extremely popular right now, and any property as a sauna just tends to perform exceptionally well. Very few properties have them, but the ones that do see a much better ROI. So being able to filter through like amenities by market has been kind of the key for me in deciding what my full investment strategy is, because some of these amenities are easy to add after post-purchase. To even if you buy an existing property that, let's say it's the one I mentioned earlier, was making $100,000 a year. Well, you can buy a sauna. I don't know how much it costs. Honestly, I don't have one, but let's say it costs $10,000 to buy a sauna, but it makes you $20,000 in year one. So you're already looking at a $10K gain on that investment. So things like that are incredibly powerful to leverage the site for, to realize not only what your property could make, but what additional amenities you can add to the property that will get you even a better return.
Got it. You know what's funny? I have my mother-in-law is Finnish. She lives in New Jersey, and she actually just cleared out an old spare bedroom, and she's literally installing a sauna as we speak.
There you go.
I'm gonna have to call her after this and say you're on the right track, and that's pretty cool. I had no idea.
Yeah, and next add the cold plunge and kind of have a little bit of both of those to keep everybody happy.
Well, she's got the pool, and it's in New Jersey, so it's still quite cold. So I think it was 68, under 6. It was like 65 degrees over Mother's Day, so that was pretty much enough of a cold plunge for me.
Yeah, no doubt.
So listen, I think that's all been excellent feedback here, and Emir, thank you so much. I think it's time. I'd like to talk a little bit about getting this type of deal funded after you actually found the correct short-term rental property on Rabbu. I don't know if you have any additional thoughts you wanted to go before I hop over to Makalee.
No, I mean, happy to contribute in this conversation as well. The only thing I'd say is the Rabbu partners with Beeline for this exact reason. It is not common, and you can't just find a short-term rental loan by going to most banks around, in the United States. So groups like Beeline are an ideal solution for anybody that's looking to finance a short-term rental. So excited to hear what Michaela has to say as well, because it's necessary and it's the right way to acquire an asset.
Well, let's talk about the handoff right here, since this literally is part of Rabbu and Beeline. So let's say you're a client. I just found the right property. I want to jump on it right away to get under contract. Does Rabbu do anything there with introductions to a company like Beeline, to somebody like Makalee? Maybe discuss that first.
Yeah, absolutely. So if you're on Rabbu and you're researching properties and you'll say, okay, I like this property in Myrtle Beach, and I need to speak to, I want to move forward with it, right? Now I need to speak to some experts that can actually help me acquire it. You're a couple buttons away from being connected to Beeline, and Beeline will jump in. We'll click a button. We'll connect you to Beeline. Somebody from the Beeline team will call you, and they'll dive right into your use case. So
perfect.
It's incredibly simple, painless as well.
Absolutely love that. Now, Makalee, Thank you for being so patient, first of all.
Oh, you're welcome.
Secondly, all right, let's say we get that handoff. How would a customer be ready once they found the right property? Like, what would you tell any investor how best to put your best foot forward?
Yeah, absolutely. I mean, every investor who comes from us, whether they find us through Rabbu or another source, they're going to be on different spectrums. We work with first-time investors who, like Key mentioned earlier, like want to get into the short-term rental market because it's gaining popularity, or they're experienced investors who have a bunch of long-term rentals and they want to grow and expand their portfolio to short-term rentals. So, we want to educate them based off of where they're at in their investor world. And we want to educate them to where they need to be educated. We love to get the application done early because it's just one less thing as they find the right property to worry about. And we have a really good picture and understanding of what they're looking to do so that we can make this an enjoyable experience. Because as a short-term rental creating experience, it's our job to provide them a smooth, enjoyable experience so that we can create that relationship forward, on however they want to do.
Totally agree with you. And one thing that was music to my ears up front, Emir, right off the bat when you spoke, talking about the customer's goals. That's music to my ears. I preach this on a regular basis. It's the same thing for us on the lending side. We're asking what your goals are, right? And that is a great question for a number of different reasons, but namely, it helps us structure a loan that best fits your needs, right? And as far as kind of getting that blanket application in early, so critical. As we all know, in this market, but even now in this real estate market, now obviously it was even more so earlier in COVID times, et cetera, things were flying off the shelves. If you don't have a blanket loan application in early, you don't want to be hot and bothered about a property right away and then just starting going through that pre-approval process. Chances are that home is under contract. It could be. So very important for all you investors out there to understand. I understand it's not the most fun thing in the world, but take the extra few minutes. It doesn't take long. You go submit a 15-minute loan application. It's sitting there. You don't have to have a property in mind yet, right? We do all sorts of different loan programs. DSCR, right? We've talked about this in previous episodes. Debt service coverage ratio. We're only looking at the cash flow of the property. Well, each property is going to cash flow uniquely. So you get a blanket loan app, and then all of a sudden you're saying, Makalee, I just found a property. Here's a Zillow link. I think it's going to rent for X amount. What do you think? And we're able to, in real time, check out that property for you, tell you if it's going to cash flow or not, tell you by how much, and print you a pre-approval in just like that. And so then you can hand that back to your realtor. You can go hand that off to whoever and go ahead and get that sales contract and not go through all those hoops. So super, super important, I'd say, to have yourself prepared. Right?
Yeah,
Yeah,
I mean,
absolutely. Absolutely. That's another reason why we want to obtain the blanket app with our borrowers and our investors is so that we can educate them, especially on DSCR, so that they are confident as they're peeling through and scrolling through Rabbu and with their goals in mind to kind of give them that forefront of everything that they should be thinking of, understanding how to calculate the ROI from the lending perspective as well to make sure that they can get approved, because we may view things and the underwriter may view things slightly different than the way, it's just creating your return on investment from, an ROI standpoint after post owning the home. So we love to educate them to understand that so they can also do their own due diligence, but also have us as a resource that they can reach out to, 7 days a week to obtain the document and the pre-approval letter very quickly.
Now, Emir, I'm about to get to you. I think you had a point to make, but I want to say this real quick. When it comes to ROI, I want to drill down on this just a minute because I get the feedback from you listeners out there, and I want to let you know you're being heard. We're going to drill down and talk about that ROI just a little bit as from a lending standpoint. With DSCR, okay, debt service coverage ratio, what we're looking at at Beeline a break even, right? Which on the DSCR model is a 1. If you're cash flowing above the expenses of the property, you're going to be above a 1. If you're not, if you're cash flow negative, you're going to be below a 1. We just need a 1. And to define that, we're looking at the proposed mortgage payment plus the taxes, insurance, and any HOA or condo dues versus the projected rent of that property. If you're breaking even or better, your income is approved. Okay. There's of course other things we're looking at, credit scores, down payment, etc. But that's how we look at DSCR. Now, for an investor standpoint, of course, there's additional expenses on top of that you want to be aware of, right? Property manager fees, cleaning fees, etc. But from a lending standpoint, we're looking at the rent versus the mortgage plus taxes, insurance, and any HOA or condo. So I want to give you guys that insight. So maybe you can hop on Rabbu and immediately kind of do some digging right there. But I will digress. Emir, what did you have to say?
Yeah, I mean, I want to echo what both of you guys have been saying. First of all, yeah, we, during COVID times, properties were flying off the shelf in hours in a multi-offer situation, but that's still happening today with good properties.
Great.
So that's why you want to be prepared ahead of time, because if you're waiting to find the property before you pull the trigger on a pre-approval, it's likely too late because the good ones don't last very long. Investors are constantly looking. We're seeing record months every month, the number of users on our site looking at properties, number of leads we're generating for our partners every month, because people are still looking. It's not the same market that it was 3 or 4 years ago, but there's still a significant amount of interest in the market. And real estate's been the world's largest asset class. Historically, people are still putting money into it. You want to be prepared. You want to have all the tools available to you. And that pre-approval is exactly right, because it will allow you to put in the most competitive offer on the property when the right one comes across your desk. So wanted to mention that. The other piece on Rabbu as well is, I mentioned the growth field numbers early on. That's definitely something that we kind of use as an initial parameter. But as you dive deeper on Rabbu.com as well, and I think you alluded to this, Alex, you have an opportunity. We actually pull a lot of this in. You have the opportunity to put in property management fees, taxes, cleaning, really any fees associated with it, so that you can get more educated as well. And that's where also the lender and the agent partners that we work with can get you even more granular information to put in there beyond what even our data tool can, because they understand all the ins and outs of your personal situation. So we're all here with the same goal in mind, to empower you with the tools to transact in what is still a growing asset class. So I always tell people, leverage all those resources to make yourself succeed here.
100%.
Yeah, and to piggyback off you, Alex, the one unique aspect from the lending perspective on a short-term rental is, and why we pride ourselves on the relationship aspect of it, just because most people don't understand this, is on the lending side of things, ROI is different because we apply an expense factor to kind of take out those fees that people think are income, but they're not, like your cleaning fees, your management fees, fees that Airbnb may charge you on an annual basis to list the home for a short-term rental. So when it comes to qualifying for the loan, we always, make our investors cognizant of that in the pre-approval process, because it's not just a necessarily a 1-to-1 ratio with short-term rentals, because an underwriter in the lending perspective wants to be a little bit more conservative with the numbers and provide that expense ratio, because there's going to be months that, November, December, if it's a beach property, that you're not going to have many renters and things like that. So this is where the education part is so important, that we want to utilize and start that relationship early with our investors.
1000%. And I think you just started to really go into my next question beautifully. And that's, from a client perspective, what do I need to show a lender rental wise when I find it, right? And let's talk short term and long term. So with debt service coverage ratio, DSCR, we got your long term rentals and short term rentals. One's a little more straightforward than the other. Makalee, I'm going to let you dive in on that.
Yeah. So like Alex mentioned, obviously long-term rentals, they're annual leases, they're very straightforward, vanilla, so to speak, where we really just look at a 1-to-1 ratio. We want the goal to be obviously the property breaking even. That market rent, that monthly lease agreement that you have set for 12 plus months with a tenant is equal to or greater than the proposed mortgage payment, including property taxes, home insurance, condo or homeowners association dues if there are any. So that's a very straightforward, very easy calculation. The short-term rental aspect of it is where it's a little bit more complex, or adding that one extra step in the calculation is just adding that expense factor ratio. So you've got to be a little bit more cognizant of the fees. Obviously, from a lending perspective, it's just a flat 25%, make it easy. So for example, if you're expecting the cash flow gross income to be $6,000 a month, we just got to make sure that all in, including taxes, insurance, HOA or condo dues, your mortgage payment's less than $4,500. So it's very easy. You just gonna have to be cognizant of those fees on the lending side of things, even if you're not anticipating it to be a true 25%. So that's really the biggest piece to be sure of prior to, like he mentioned, making sure you meet the credit scores, proper home insurance, things like that, that are your typical mortgage loan process that you expect.
Absolutely. Absolutely. I couldn't say it better myself. And I did want to also touch base a little bit on down payments as well. What do we got there? So I that's a probably number one question more than anything. With the pre-approval, we're going to tell you to pre-approve early. We all know you're procrastinators out there. We're still going to get a phone call at 11 p.m. on a Saturday asking for a pre-approval. So do your best, but we understand that. Now, what's the down payment looking like, right? That's the real question.
Yep. How much money is it going to cost me? So when it comes to a down payment on a DSCR, the investors and the lenders want you to have a little extra skin in the game versus a long-term rental. So minimum down payment is 25%. Credit does play a factor in the down payment calculation. So, for a borrower who has a 780 credit score, 25% versus a borrower who might have a 680, you might need 30%. So that is another important aspect that we look at in the pre-approval process, so you have the right expectation and can make sure that you have sufficient funds for closing and understand kind of what that down payment looks like, but 25% minimum.
Now, it's important to note as well, this is May 14th, 2025 for you listeners out there. Guidelines change and they change often. Please reach out to us. These may be completely different by the time you're listening. We may have less down. We may have more. We don't know. What are the eligible sources that people can use for these down payments? Because it doesn't need to be in your checking savings, right? We can have a few different places. I know for one thing, we can do home equity lines of credit on a primary or a different investment property you may already own. You can maybe do a cash out refinance on maybe a free and clear property, or again, a property where you have equity that's been growing. Maybe it was an equity property you originally bought as an investment property. It's built up enough equity. You can go ahead and pull some cash out and buy yourself another, right? So that's part of it. And also, we do allow some gift funds as well, which is very unique for an investment property. Makalee, can you talk to us a little bit on that?
Yeah, absolutely. So this is where it's fun for us to educate these investors, because you can get really creative with kind of coming up with the down payment money to continue to build your investment portfolio. So absolutely, you can definitely get a gift from a family member, a business partner. As with these loans, you can title in an LLC. So whether it comes from a business partner, a family member, you just have to prove that you have 10% of the down payment yourself. So the business partner can provide the other 15% and the closing cost. So you can really get creative with it. You can also, cash out investment stocks. People do that as well a lot lately on getting into
As far as like
investing.
retirement accounts.
Yeah, retirement accounts, stocks, things like that, liquidating. So there's a lot of creative ways for people to either just utilize other assets to build their real estate portfolio or get into the game. When you don't have another property or equity in your home because you just bought a home last year and you're young in your 20s or whatever, to where you can get creative and still get into the investment world.
Absolutely. I think a lot of people just think I need to have this money in my checkings and savings, and that's just certainly not the case. We got lots of different ways to go about this. Another thing I might add, seller credit is a big thing in DSCR world that you can use a lot more so than the conventional space. We can go up to 6% of the purchase price in seller credit. That's massive. Massive, massive. 2% is what you can do for conventional loans, by the way. So we're triple the benefit as far as what you can utilize from the seller side of things to offset your closing costs, et cetera, right? So many things on the DSCR side. We are just killing the game at, to be honest, over here at Beeline and partnering with Rabbu and looking for a long-lasting relationship that's going to benefit our investors. Makalee, I don't know if you have any last kind of tips, tricks, hacks, anything you might want to add about financing for our investors.
Yeah, I mean, I just think being confident and educated and understanding the DSCR loan product and what options you have and utilizing our partners like with Rabbu for you to just set yourself up from success. There's so many avenues and resources that you have that in 2025 to utilize so that you are a successful investor moving forward and can grow your portfolio. That's what, at Beeline, I'm going to say it again, that we pride ourselves on the relationship aspect of this because we're here to hold your hand in every step of the way because we believe that everybody can be an investor. And so it's exciting. It's exciting to hear about the resources that Rabbu offers. And it's a great partnership that we have. So it's just, just about reaching out and starting that conversation, and we're here to help.
Love it, love it, love it. And, we go all the way from the beginning to the end here. We got Rabbu finding you the property. We got Beeline getting you the financing. And finally, we have another partnership over at Red Awning that can be a part of the property management side of things. You can go to episode 1 for that. We talked all about that in detail. So with that, I think that's kind of all the time we have for today. Emir, Makalee, thank you guys so much for your time. And most of all, thank you, listeners. I hope you enjoyed our chat today. And also, please be on the lookout for our future episodes. We do have some new and exciting things in store for you all, and we can't wait for next time. Again, Emir and Makalee, thank you guys so much.
Thank you for having me.
Thank you for having us.
All right, guys, have a great day, everybody. We'll talk to you soon. Bye-bye.